Assalamualaikum. Welcome to lecture 4 of tax. So, in this lecture, we are going to go through the next type of income, which is again under non savings, which is your employment income. This lecture is a pretty lengthy lecture, and this lecture is divided into two parts, lecture 4 and lecture 5. Lecture 4, mostly we are going to talk about the cash, the salary, and all. And lecture 5 will be all the benefits and all. Benefits means employee is receiving any benefit from the employer which is not cash. Okay, that is known as benefits. So in lecture 4, first important thing is you have to identify whether it falls under employment or self-employment. There are some criteria for you to go through which will help you to decide whether you fall under employment or self-employment, and why HMRC prefers employee status over self-employment. Then proof of employee status. Then the employment income, the types of income, the pro forma, the earnings, basis of assessment, expense allowances and reimbursed expense, allowable expenses for employment, claiming tax relief for expenses, and finally we are going to summarize with a conclusion. So now, this is the graphical representation of what I've just explained. So the main objective of this lecture is to describe the details rule for assessing your income, whether it's a pay in cash or benefits, which is from your employment. So the significance. Now, it is normally easy to distinguish a self-employed person from one who is employed. But when a person, but there are some difficulties arise when you are dealing with person engaged on a subcontract or a freelance basis who is giving you personal services like musicians, actors, teachers, lecturers, IT, business consultant, childminders, whether they are self-employed or employed. So in this case, such person mostly they will maintain their self-employed status. Why? Because they do not have any contracts of employment. Like for example, me, I'm a lecturer on YouTube. Am I an employer or self-employed? You can't put me on employment because I do not have any contracts of employment. Okay, I'm not entitled to any employment benefit like holidays or sick pay. Okay. Now, an employee generally has a contract of service and self-employed contract for services. Now, why HMRC would prefer employee status? The reason is number one. See, HMRC will always want more and more of tax from you. As a taxpayer, your objective is to save tax. From the point of HMRC, they would want to take more of your tax. Okay? Because number one, it generates more NIC. See, as a UK resident, you have to pay national insurance contribution. Every taxpayer has to pay this NIC plus their income tax. Okay? We'll see in lecture 10 the detail of NIC. There are various classes of NIC, but for employees, it is class 1. Class 1 NIC. Employees pay class 1 NIC. Not only employees, even the employers. So employers pay class 1 NIC on salaries, 1A on benefits. There are two types of NICs. One is 1 and one is 1A. So employers pay 1 on the salary of the employees and 1A on benefit. The moment you see this A, please understand it's not on cash, it's on benefit. And employees pay class 1. And self-employed, if you're a self-employed, you pay class 4 contributions only. So if you're an employee, it's class 1. If you're self-employed, class 4. There are 3 classes. Earlier there were 4 classes. Now from this year onwards there are 3. Class 1, class Okay, 1 is divided into 2. 1 and 1A. Now, so if you're an employee, you cannot reduce your income tax. You have to pay tax because your tax will already be deducted from your salary. So there is no risk of income tax evasion. What is income tax evasion? This is illegal. Income tax evasion means you are not paying income tax. And if you're an employee, you can't claim any allowable expenses. It's more difficult for you to claim any allowable expenses. That means you cannot deduct from your profit expenses and bring down your profit and pay lower tax. Self-employees could do that, but employees can't do that. Okay. So for example, if you're a self-employed consultant, you're maintaining an office at home. What do? For all the business related travel cost, you're going to get tax relief. You are going to deduct it from your income and pay lower tax. And also, tax collection is cheaper if you're an employee because pay is easier. This is run by the employers. Employers only will cut this. So what is your proof of employee status? Remember, whatever we are studying here is very important. You need to remember it if you are planning to if you are planning to choose ATX later on in P level. And by the way, I'm also uploading ATX lectures on my YouTube, but it is not for free. For all my YouTube subscribers, you need to join my channel and become a gold member. At least gold member, that's the minimum. Or you could become a diamond member to watch my ATX lecture. If you are located in a country where you can't join my channel because not all country has that feature, you need to email me to purchase my recorded lecture. And also my slides. You need to email me to get the PDF slides of my lectures, both ATX and tax. So now coming back to lecture. Now there are what we know as badges of trade. You need to evaluate this based on each case. You have to look for this in your case study. This will help you to decide whether you are an employee or self-employed. Okay. Number 1. Can you use a substitute? See if you can send a substitute. That means someone else will come and do your work. Okay. If you cannot send a substitute, it's employment. Because as an employee, you can't hire someone else. You can't substitute someone else on behalf of you to do the work. You have to do the work for which you are appointed. But if you are self-employed, you could send a substitute. Next, do you have control over the work that you are doing? Okay, so if the person providing work has control over the work, that means the person is giving you the work. Your employer, if he has control over you, it is employment. Next, do you have a set working pattern like fixed day or hours? If you have fixed day or hours, it is employment. And if you have a freedom to choose, it's self-employed. Next, are you being paid fixed hourly, weekly, or annual rate? If it's fixed rate, it's employment. Mostly under employment, it is salary. But for self-employed, the payments are variable. Do you receive bonus or overtime? If you are receiving it, it's an indication of employment. Do you bear any financial risk for unsatisfactory work? If you are bearing the financial risk, you are self-employed. Next, are you the one who is providing the plant and equipment to do the job? If you are using your own equipment, it is self-employed. And are the work quoted for a fixed price? It does not matter how long it takes, but for this work, this is your price. If it's fixed, okay, it is more of a self-employed. And Who decides on the timetabling for carrying out the jobs? If it's you, then it is self-employed. So, do you have to correct the unsatisfactory work in your own time and at your own expense? If it is so, then it's self-employed. And do you work for a number of different customers? If you're working for a number of different customers, you are self-employed. Now, so you have to categorize these questions into the following test. First, is known as obligation test. The same things will are repeated in ATX as well, but with some additional uh, some additions which are not covered in tax. Now, obligation test. See, if the person is obliged to perform the work, it's employment. You have to have an obligation to perform the work because of the contract of employment that you have. Next is similarity of the work test. If the work undertaken by you is similar to the work undertaken by the employer's own staff, it's employment. Third test, exclusivity test. If the person is not allowed to do similar work for other employees, if you're not allowed to work for other employees, do similar work, it's employment. Because if you're self-employed, you will be giving same type of work to your different customer. An uninsurable risk test. The fourth one. If the person does not take an uninsurable risk of self-employment, then it's an employment. That means you are not the one who is taking the risk. Because if you are self-employed, you will not get holidays, sick leave, then it's a non-recurring income. So these are the four tests. Now, it is possible that a person could be both employee and a self-employed. How? He might be employed for work undertaken for one employer, but he might otherwise remain self-employed. Remember, out of all these badges of trade, or the four tests, you can't come to a conclusion based on one single badge of trade or one test. Okay, you have to see the overall picture to see more, which is giving you more answer. Is it more of employees or self-employed? If you answer the question or the test, based on that, you have to come to a conclusion. Now, activity 1. So let us go through this case study to see. Now, what are you required to do in activity 1? You are required to explain with reasons whether or not his contract with Space Mirror Limited will alter his tax status from self-employed to employed. So for this, you need to read it. This is how you will actually be asked in your actual tax exam. You will be given a case study. Okay, of course, some factors will be there. You have to see which one are you satisfying. Which badges of trades are there present. So Hank Starman is a self-employed musician. He has accepted a contract as a backing musician for the band. The tour commences on 1st May 2024 and will end on 31st Jan 2025. It's not even 1 year. Now there are 6 concerts a month that will be played over the 9-month period. Hank will be paid 1,000 a concert, and his accommodation and travel costs will be funded by the band, which is to a limited company. While contracted, he will use his own instrument, but he will not be able to perform work for other employers. In the previous tax year, he has carried out a variety of assignments for different employers, and he expects this to be the case in the other months of 24 to 25. So now we'll see. 4. Okay, so we are going through the factors that will suggest that Hank will be an employee. So these are the 4 factors that suggest he's an employee. Number one, the first one is the contract. The contract does not allow him to perform for other employers. That means during that 9 months, he cannot perform for other employer. So that is a sign that he is an employee. Second, the obligation. There is an obligation to perform music, okay, in certain places at certain time. Who will determine? The band. Again, it's an employee. Third, the work. If you see the work, it is similar. That means the other band members also will perform the same function. Again, employee. And the fourth one, fee. This is a fixed fee, and they are not meeting the travel and the accommodation cost personally. That means he's not bearing any risk. So he's an employee. He's not meeting the uninsurable financial risk. So he's an employee. So all this four says he's an employee. But although, remember the word although. If there are factors against it, you can connect it using the connecting words like although. If you see, he has to provide his own equipment. So because he has to provide his own equipment, it's a sign is self-employed, and also the contract is short term. The above mentioned factors are strong indicators of employee status for the period of contract. If you see, only one factor says is self-employed. That is, he has to provide his own equipment. But if you see the previous four factors, they are strong indicators of employee status. So in this case, it is possible he could be both employed and self-employed. Employed with space mirror and self-employed for other work in the same tax year. Now, so we are moving on to the second time. So we are done with employment or self-employment. Okay. Basically, the important thing is the badges of criteria, whether you have met it or not. Coming to employment income. So various types of income are there under employment. First, so general earnings, okay, from your employment is your remuneration that you receive less all the expenses of employment. Remuneration, normally they are paid in cash or could be paid in non-cash form. But remember, even if it's in non-cash, it is taxable. Like how cash is taxable, the benefits that you are receiving, like company cars, company accommodation, the holiday, the interest-free loan, all this are taxable. Now, this is the pro forma, and you need to know this because definitely 101% you are going to get a question where you have to calculate income tax payable. For that, you need your employment income, and for that employment income, you need a separate working to calculate your employment income, and you need this pro forma. It is going to be very helpful for you. So make sure that you learn all this pro forma. You by heart it. This is only for employment income. First is your salary. With that, you add your bonus if you have any. You have to see in the question whether you have been given bonus or commission. If you are given, add all. Then comes your expenses. All expenses deduct. So these are the expenses that you can deduct normally. Employee contributions into occupational pension scheme. Okay. See, pension, there are two types of scheme, occupational and personal. If it's occupational, an employee's contribution you can deduct from your salary. If you are subscribing to your professional body, not any personal things, okay? You have to subscribe to a professional body. Then any payroll gives to charity, allowable expenses. The total is known as income from employment. Now, your pension income is taxed in the same way as earnings from employment income. Now, basis of assessment. So this is the basis of assessment. If it's earnings, it includes all your wages, salary, commission, bonus. It is all monetary. Okay, all other profit are monetary or convertible into monetary reward of employment. If you can convert it into cash, you add. It is known as your earnings. And these earnings are assessed on actual receipt basis. That means the earnings received in the tax year. What is your earning received in the tax year? That date is normally the earlier of. the date the payment is made, and the date on which the taxpayer becomes entitled to the amount. Remember, these dates are usually but not always the same. Okay, the date of payment and the date the taxpayer becomes entitled are not the same most of the time. So earlier of this two date is the date earnings are received. Now, there is a more complex if it comes to company directors. Why? Because if you're a company director, you are in a position to manipulate. You can avoid yourself earnings at times so that you can avoid tax. Either you avoid or you delay the payment of tax. Therefore, in this case, you have to your earnings will be assessed on the earliest of these four dates: date of receipt, end of the company's accounting period, if amount is determined during the accounting period. When amount is determined, if determined after the end of the accounting period, to which they relate. So out of this three dates, whichever is the earliest. This for the directors only. Normally for the other employees, it is these two dates. Okay, 1 and 2. Earlier of this two. But for director, rules are more stricter. Out of this three, the earliest. Now we'll be doing activity 1, calculate the amount accessible on margin. So here to 30th September 2024 to 30th September 2025, 3,000 per month, 3,500 per month, and bonus in respect of the year ended 30th September 2023 and paid with December 2023 salary 5,000. In respect of year ended this one and paid with December this one 6,000. So you have to see which year, what is the amount accessible as employment income. You have been given different dates: salary, bonus. Remember the earlier of, and he's not a director. Okay, they will tell you Martin is an employee. So the earlier of the two dates, the date of the receipt and the date he becomes entitled to the payment. So now if you see here, first we'll take the salary. So this 3,000 and 3,500. From September we count October, November, December, January, February, March. It is 6 months. So 3,000 into 6, 3,500 into 6. Okay, this you take. And that bonus also you have to add. Bonus, which one will you take? 24, 25. Look at the tax here always. It is this. You have to take as bonus. Okay. So now 6,000. When you add, is this. This is the amount. So if you read this, under normal circumstances, employee becomes entitled to the income on the same date as is paid by the employer. The fact that bonus payments are calculated by reference to the company's year end 30th September is irrelevant. So you are calculating bonus payment because company's year end is 30th September. This is irrelevant. But if you are a director, your accounting period year end is relevant if you are a director, because since you are an employee, this is not relevant for you. Normally the date you are being paid by the employer, that is the date employee becomes entitled to the income. Now, activity 3. Calculate the amount accessible on Eric, clearly stating the days on which remuneration is deemed to be received. So if you see, Eric is a director here. So now we'll see if he's a director, how do you assess? Who is preparing accounts to 31st December annually. So first, second, third. First, salary on the last day of each month at the rate of 6,000 a month. Director's fees of 20,000 on 30th April in respect of the year end at this. Fees were voted on this date. Performance related bonus 100 on 30th June 2025 in respect of the year end at this. This was voted to elect on 8 March 2025. So now, remember salary. It is monthly. So we'll take 12. Fees and bonuses also will add. Fees and bonus will add. Together this is taxable. But they also asked us the date. So this is the last day of each month. Fees 31st December 2024. See, fees were voted during the accounting period. So we take end of the accounting period. Coming back to the fees. This 20,000 fees was in respect of the year ended. The fees were voted on 20th December before the year end. And now bonuses. It is 8th March. This is the date. Bonuses was voted after the end of the account. So after the end of the accounting period, bonus was voted. It's 8th March. So tell me which day? Earlier. If you see it is 31st December 2024, this is the date. Because this is earlier. If you take this last day of each month, this will be 31st December 2024. So now we are moving on to the expense allowances. Generally, these are taxable in the hands of an employee unless expenses are wholly exclusive necessarily in the performance of duties of employment. Now, so an employee, they can claim an expense deduction. That means an employee, if there is an expense that has been incurred, an employee can deduct that. They can claim an expense deduction for certain expenses. For example, if an employee is contributing into an occupational pension scheme, they can deduct. We have covered this in lecture 2. Payroll gifts to charity, they can deduct. We have covered this in chapter 2. Professional subscriptions to approved bodies, like if you are subscribing to an ACCA, can deduct. Entertaining, provided the actual entertainment costs are treated as disallowable expense in the hands of an employer. Remember, entertainment costs are disallowable for employer, but for employees they can deduct. Qualifying travel cost. We will cover the travel cost in this section 3. You can deduct. If you are using your own car for business purpose, that expense you can deduct. We'll see that in this next section. Working from home, section 3.4, you can deduct. Other expenses that are wholly exclusively necessary in the performance of your duties of employment, like accommodation or subsistence, we'll cover in this lecture. So now we'll go in detail into all this. This 4 will cover. First is travel cost. Okay, any travel cost incurred by an employee, you can deduct. If they are in the duties of your employment or you have incurred them to travel to or from your home to a temporary place of employment. It has to be a temporary place from your home. Either from home to temporary place of work or from temporary place of employment to your work. Or you have employee has incurred them to travel between 2 or more temporary places of employment. And provided employee works for the same employer at each location. You can't work for different employees at different locations. Let's say there are 3 locations. You are working with the same employer in all those 3 locations and you're traveling among them. So the cost that an employee incurs while traveling among the 3 locations, you can deduct. Now, this will help you to understand the picture better. So let's say from home to temporary place of employment. Or is the other way around? This is allowable. Temporary place of employment to another temporary and from here to here, allowable. Temporary place to normal place to temporary, allowable. Temporary place to your normal place of employment. This is one way only, allowable. But if you're traveling from your home to your normal place of employment, that is your employer's premises, that means the place where you work, or from there to your home, this is disallowable. If you know the disallowable part, rest all are allowable. This is the easiest way you can remember this picture. Just know what is disallowable because everything else is allowable. Then, the cost of regular commuting from your employee's home to their permanent place of work. This is not allowable. This is disallowable. Because regularly you're communicating. Every day you're doing this. Okay? Even for exceptional reasons you're traveling, you can't. They're disallowable. Like weekend, you're working on weekends. You're traveling from home to a permanent place of work. Still not allowable. And any cost incurred for purely personal reasons. Let's say you're attending an out of hours office party. That's why you're traveling. Still they are disallowable. What is temporary employment? Temporary employment means where an employee is continuously working for less than 24 months, less than or equal to 2 years. Because if it's more than 24 months, it becomes a permanent employment. Now, next is your own car. So we have finished the travel cost. We are moving on to own cars. Okay. What do? Employers sometimes give whatever the cost was incurred by the employees, they reimburse that to the employees. So here, employees use their own car for the business purpose rather than company giving them company car. So in this case, they're giving them mileage allowance. Mileage allowance means an allowance is given for the mileage they are covering. Okay, provided this is within the limit that is set by the HMRC, statutory mileage rates. No taxable benefit arises. If it is within the limit, no, you don't have to tax on the benefit that you are receiving because this is one kind of benefit that you are receiving from your employer. And remember, you have to remember these rates by the way. They are statutory tax-free mileage rates. They are given on your tax rates in your exam, in case you forgot. Up to 10,000 miles, it is 45 pence, and beyond 10,000, it is 25 pence. Remember 45 and 25. Now, how does this scheme works? This is very important because most of the time I've seen a question on this area. This is very frequent. If your actual allowance that you are given by the business is more than the statutory limit, excess is taxable because you are receiving more benefit than you are actually uh, entitled to. If you are receiving, if you are not receiving any allowance by your employer, so an allowable expense may be claimed equal to the statutory limit. Whatever is the statutory limit, up to that amount you can deduct as an allowable expense. If your actual allowance is less than the statutory limit, you're receiving less than what you should have actually received. Remember your allowable expense. This is restricted to the excess of the statutory limit over the actual allowance. So we'll definitely do a question to understand this better. Activity 4 will help you to understand this picture. See, here we are doing one or two questions, but it is your job to go and open your revision kit and start doing questions, similar type of questions, picking one particular topic. For example, now I'm using own car. So start picking questions where they have own car from all the questions, all the past paper. In that way, you will understand a basic pattern. Okay. If you solve questions topic wise, rather than sitting and doing one whole past paper, it is better for you so that you know what are the different varieties or ways an examiner might ask you a question on a certain topic, like in this case, your own car. So now, these are the miles he's traveling. employee is using his own car for work, so the mileage allowance is receiving. Between home and normal place of work, 5,000 miles. Normal place of work and client, 9,000. Home and client, 3,000. Home and employer, 200. And other personal travel, 2,800. And you are receiving 50 pence, 30 pence, nil. So what do you have to do? Show the taxable amount or allowable expense for employment income. Assuming employer pays this much of business mileage allowance. 50, 30, nil. Now, this is the question. So now you have to understand what are your business mileage and what are your personal. Okay. Now if you see between home and normal place of work, this you can't take. Between normal place of work and client, this 9,000 you can take. Home and client, 3,000 also you can take. Home and employer's Christmas party, you can't take. Other personal travel, you can't take. So the business travel are only this. 9,000 and 3,000 you have to add, which is equal to 12,000. This is more than 10,000. First, we'll calculate what amount we are receiving at different rates. A 50, B 30, C 0. So 6,000, 3,000 and nil. Then the statutory amount. Remember 12,000 is more than 10,000. So first 10,000 at 45, excess 2,000 at 25. So it's always 5,000, 5,000 and 5,000 under all three scenarios. Now if you see in A, mileage allowance is more than the statutory. You have received more. So this is a taxable amount. 1,000 is positive figure. You have to pay tax on that. Only the statutory amount is exempt from tax, the 5,000. The 1,000 excess will be taxable. Here you are receiving 3,600, which is less than the allowance. So this is an amount you can deduct. It's an allowable expense, 1,400. And here it is 5,000. So in this case, 5,000 is your allowable expense. Now, third, working from home. This is the third one. So we have finished travel cost and using your own car. Now working from home. If employee is working for their employees from home, they can claim certain expenses to be deducted. That is, first one, where they are using their business telephone calls from a private telephone, they can deduct. But remember, not the rental charges, only the cost of business telephone calls you can deduct. Other household costs that you can deduct are heating and lighting, and up to 6 a week without evidence, and larger amount if justified by evidence and calculation. See, remember this tax relief you will get whether your employer has reimbursed the employer for this cost or not. Doesn't matter, you can claim the tax relief. But employees, if they are working from home on a voluntary basis, they cannot claim expenses if they are not reimbursed by the employer. See, employer has to incur some cost for you to claim it. If employer has not incurred any cost, and if employees are voluntarily working from home, employees can't deduct that as an expense. They can't claim. And finally, the last part, other expenses. So we have finished the three: travel cost, using own car, and working from home. Now we are moving on to other expenses. These other expenses, you have to see whether those expenses you are incurring wholly and exclusively for the performance of your employment. That means the entire expense has to be for that purpose. If it's for any other purpose also, you can't deduct. So necessarily incurred means expense must be incurred. You have to incur that to perform your duty. Otherwise, you can't perform your duty without incurring that expense. That means if there were any other person other than you who is performing this, they also should have incurred this cost. So now wholly, exclusively, and necessarily. This is the meaning of this. You have to see sometimes when you're taking an expense, there are dual purpose. There might be more than one purpose. In that case, you are not incurring that cost just for to undertake the duties of your employment. If this is the case, if there were two purposes, you cannot treat as incurred wholly, exclusively, and necessarily for the performance of your work. Let's say you are taking lunches, okay? Unless it is provided by your employer, you can't deduct because you're not taking lunch for the purpose of your work. So you can't deduct this as a cost. Why? Because your main purpose is to eat, not to perform your duties of employment if you are taking a lunch. And in some cases, expenses, who is having duality of that means two purpose, you can apportion them between the personal and the business. Like if you're making a business trip, okay? So you are extending a business trip to incorporate a holiday. You are going for the purpose of your business. Now you are extending that trip because now you want a holiday also. In this case, you don't disallow the whole expense, rather you apportion the personal section and the business section. The business part you allow, you deduct. Personal, you don't deduct. Next, expenses incurred to put the person into a position to carry out the duties of the employment are not allowable as they were not performed in the course of the duties. Let's say if you're training, cost of training to obtain a qualification were paid by the employee themselves. Did you understand this point, by the way? Expenses incurred to put the person into a position to carry out that duty of performance, they are not allowable because you have not incurred that cost while you are performing the duty. You are incurring that cost to put you into that position to carry out the duty. Let's say the cost of training, because with the training, once you get the appropriate qualification, you will be in that position. So the cost of that training you can't deduct, they're not allowable. Now the cost of clothes for work, this is not a deductible expense, you can't deduct. But in certain cases you can, where you are giving a protective clothing because it is for the purpose of work. Okay. And in some cases, let's say an employer might need expensive clothing like business suit. For example, they are going for a meeting, they need a business suit, but this is not an allowable deduction because this has two purposes. One, an employee needs to fulfill the personal need of being dressed for decency. Now, claiming the tax relief for expenses. So once again, expenses that are generally allowable in all employment situations. Normally, you can deduct. They will be deducted by the employer from the salary before calculating the tax to be deducted at source. First, expenses will be deducted. Normally, under all the employment situations where expenses that could be deducted normally from salary will be deducted by your employer, then they will take out the tax from that. Such few examples of expenses are your pension contribution, pension contributions to occupation scheme, and payroll gifts to charity. If you are incurring such expenses, your employer will not ask you. They will straight away deduct this from your salary, take out the tax under pay, and then they will give you your salary. Why? Because these expenses, they are clearly allowable. There is no doubt whether they are allowable or not. Automatic exemption is there. So, okay. So these are some expenses that are clearly allowable. That means automatically they are exempted. They do not come under taxable income. Number one, employer does not have to inform HMRC of the expense, allowance, or reimbursement paid to or on behalf of the employee. See, if expenses that you can clearly deduct, you don't have to inform HMRC. Employer does not have to inform HMRC if this is the case. They do not have to pay inform HMRC on the reimbursement. That means employer, let's say they have reimbursed 500 to the employee. This they do not have to inform HMRC if that is clearly deductible. Second, employee does not have to make a claim in their tax return for allowable expense. For your allowable expense, you don't have to make a claim in your tax return, employee. Because some expenses are there are automatic exemption. It is clearly 100% allowable expense. But some expenses you have to make a claim, whether you can deduct or not. But such expenses you don't have to make a claim. Now, so this automatic exemption covers situations where employers pay expense allowances or reimburse expenses that relate to the duties of employment. Let's say out of office travel. Clearly you can deduct. No need to inform HMRC or claim for it. Subsistence cost, business entertainment, phone bills, uniforms, tools for work. All this you can deduct. Automatic exemption is there for this cost. So to obtain tax relief for any other allowable expenses that are not addressed to the payroll by the employer, that means the expenses that are not deducted by the employer. And if you want to get a tax relief for those other allowable expenses, then employee has to claim for those allowable expenses when they are making the annual tax return. That time they have to claim. So that's it for this lecture. Now, the syllabus area we have touched section B, income tax, under that income from employment. First one, we have recognized the factor to be treated as employment or self-employed, that is known as badges of trade. Then we have recognized the basis of assessment for employment income. If you are an employee, there are two conditions, earlier of the 2 days. If you are a director, earliest of the 3 days. Then you recognize the income, the pro forma, add salary, bonus, commission and deduct expenses. Then we recognize allowable deductions like your traveling expenses. Then statutory approved mileage allowance. Most of the time this is asked, mileage allowance. So make sure that you know the rules. If you're receiving more than the allowance, if you're receiving less, if you're receiving nil, what are the situations? We have done a question. Now, so now let us summarize what we have discussed in this lecture. HMRC prefers employee status over self-employed. Why? Because it is easier for them. They can straight away deduct tax, and NICs are also higher. Class 1 NICs are higher compared to Class 4 NIC. And income are collected at source, the income tax. And also employees, they can't deduct much of expenses. It's more difficult for them to claim expenses, allowable expenses. Next, so these are some badges of trade which will help you to decide whether you are employee or self-employed. What is the level of control over your work? If you're having a control over your work, you are self-employed. What is the ability to provide a substitute? If you have the ability, you are self-employed. Who bears the financial risk? If you bear the financial risk, you are self-employed. And who provides the equipment? If you provide the equipment, you are self-employed. Now, for your exam purpose, employment income normally includes your earnings. Earnings means your salary, bonus and all your benefits which are taxable, because there are some benefits which are exempt also. That will cover in the next lecture. So, normally amounts are assessed on receipt basis. That means when you are being paid or when you are being due for payment. And these are the allowable expenses. So allowable expenses includes your pension contributions to occupation scheme, payroll gift to charity, professional subscriptions, travel cost, entertainment expenses that are disallowed in the employer's tax computation. Remember, employment expenses in the employer's tax computation are disallowed, but employees it is allowable. Then for home workers, they can claim up to 6 per week for telephone calls. And mileage allowance in excess of statutory limit is taxable. Remember the first 10,000 miles at 45 pence and excess is at 25 pence. And what is your mileage allowance? They will give you. Mileage allowance received by employer. Statutory is fixed. These are the technical articles. There are no technical articles for this lecture. Thank you for watching, and I shall see you in the next lecture, that is lecture 5 with the benefits.